Good day, everyone. Thank you for taking the time to join us here today. In our presentation, we will be outlining the tax findings in relation to your tax query. I, Ashika Shaji, shall start off with the scope of work entailed in this report. We have provided tax advisory with For the purposes of this opinion, we have examined the company's share register and trade summary that we have deemed necessary or appropriate for the purposes of this opinion. The following slide is a list of the type of transactions for which tax implications will be discussed and advised thereon, which include share purchases, disposal of shares, dividend in specie, and cash dividend-related transactions. I will now pass on to my colleague Kyle, who will be discussing the tax implications in respect of share purchases.
Hello, my name is Kyle Steenberg, and I'll be providing our tax opinion on the purchase of 1,000 Vodacom and 1,000 Aspen shares during the 2022 year of assessment. Now, as the business unit is a share dealer, it may qualify for a Section 11A deduction on the cost price of the shares purchased during the year. In order to do this, they would need to meet the general requirements per Section 11A.
Firstly, a trade would need to be carried on. The definition in Section 1 of the Income Tax Act of trade is given a wide meaning, and thus, as the business unit purchases and sells shares for profit, a trade is being carried on. Secondly, there would either need to be expenditure or losses. Expenditure is a voluntary payment. Nedbank willingly purchased these shares with a speculative motive to sell them for profit later on, and thus a voluntary payment has been made and expenditure took place. Thirdly, it would need to be in the production of income. The purchase of shares today is an inevitable concomitant for the capital appreciation and subsequent sale thereof, and thus they have been purchased in the production of income. Next, the expenditure would have to be actually incurred in the current year of assessment. The Aspen shares were purchased on the 1st of June 2021 and the Vodacom shares on the 1st of February 2022, which is before the year of assessment ending 28 February 2022. And lastly, the share purchase must not be capital in nature. Due to the speculative nature of the trading from the business unit in shares, this will be revenue in nature. And thus, all the requirements of Section 11A general deduction formula have been met, and the total cost price of these shares may be deducted from taxable income. 22(1) of the Income Tax Act states that trading stock not sold by the end of the year of assessment must be included in taxable income at cost. The accounting treatment differs from the tax treatment here, as in accounting, these shares would probably be held at fair value through profit or loss, and a value adjustment would be processed at financial year end. However, tax specifically states that financial instruments must be included at cost. Consequently, the net effect on taxable income is R0, as the shares are included and deducted from taxable income at the same amount.
Thank you for the introduction, Mr. Steenberg. I'm Revin, and I will be discussing the tax implications with regards to the Stastl shares and the distribution of those shares to the shareholders. The Stastl shares will be classified as trading stock because your company is involved in the carrying of trade of stocks and shares, as well as the fact that the Stastl shares were held for less than 3 years. It will not be considered capital nature as per Section 9 Cap C2. Therefore, the cost of those shares will be a deduction as part of your opening stock as per Section 22(2) for income tax purposes. The shares will be distributed as dividends to the shareholders. Therefore, it is a dividend in specie, meaning that it is a dividend not of cash in nature. This will trigger Section 22(8)(b), as the dividends on these shares will be a deemed recoupment on the market value on 28 February 2022, which is when the shares were distributed. This amount will be included in your gross income for income tax purposes. This will now also trigger some dividends tax. Because it is a dividend in specie, this will make your company liable for the dividends tax. It's also important to note that the dividends tax is taxed separately from your income tax. These shares will be taxed at 20% on the market value of the shares on the day before the shares were disposed, as per Section 64 Cap E3A, because the Stastl shares are listed on the JSE. Dividends tax will be deemed to be paid on 28 February 2022, as it is on the earlier of payment or when it is due and payable. You will be liable to pay the dividends tax at the end of the month following the date the dividends were deemed to be paid, which will be the 31st of March 2022. I will now hand over to my colleague, Mrs. Lesego Ramorula. Thank you.
Thanks, Revin. Good day. I am Lesego, and I'll be taking you through the cash dividend. We are dealing with a foreign dividend as UPN is a foreign company. The amount received is to be included in gross income as it meets the definition of gross income as per Section 1 of the Income Tax Act under Paragraph K. As the group holds less than 10% equity and voting rights, you will only qualify for a ratio exemption under Section 10B3 of the Income Tax Act. Section 25D states that any amount received in any other currency must be translated to the currency of the Republic using the spot rate on the date the amount was received. The $5,000 must be translated using the spot rate on the 31st of December 2021. Lastly, the dividend's consequence. According to the SARS website, which was last updated on the 23rd of February 2022, it states that foreign dividends received by individuals from foreign companies with a shareholding of less than 10% are taxable using the normal tax system and not the dividends tax. Corporate withholding tax of UN to South Africa is 15%, thus 15% will be used. Thank you. I will now hand over to my colleague Jonathan.
Thanks, Lesego. I'm Jonathan Price, and today I'll be addressing the disposal of your UPN shares. Since the shares were held for over a period of 3 years and the rest of Section 9 Cap C is met, the shares shall be deemed to be of capital in nature and subsequently attract capital gains tax consequences for yourself. This is not a separate tax and shall thus fall within your year of assessment's taxable income at a rate of 80% for companies after proceeds have been reduced by the base cost of the shares. Due to the UPN shares being held in a foreign currency, paragraph 43 of the 8th schedule shall apply. This is in reference to foreign exchange transactions, which means you will need to apply the spot rate on the dates of which you purchased and sold the relevant shares to translate the values into South African rands prior to your calculations of capital gains tax. Due to the inability to find any data on the share prices of UPN at the time of purchase and sale, we cannot give you any values as to the outcome of this transaction on your taxable income. I will now hand you over to my colleague, Ashika. Thank you.
We have provided the tax opinions based on our professional understanding of the facts provided by the client and the applicable laws in respect of each transaction. This brings us to the end of our presentation. Thank you for your interest and attention.